3, 2, 1. That's us, man.
Are we on?
We are on.
New computer's working?
I'm feeling very dignified with my glasses on.
They make you look artistic. Yes, artistic. Not autistic, artistic.
I said autistic a minute ago. Yeah, I'm not used to wearing glasses, but this is so I can actually see Jerry's charts now.
Excellent. If everybody needs to get glasses so they can see the charts, that's the way it is. Yeah.
All right. What do you got for us this week, man?
We ready? It's the Ides of November almost.
I don't know what that means.
Ides. Like the Ides of March? Yeah. Well, it just means the middle of the month.
And so I learn something in this show every time. It's an educational show.
It's an educational show. That's right. All right. TSP Update Show, 14 November, almost the Ides of November, 2021. It was red across the board. So we haven't seen this much red in the market in quite a while. C Fund hasn't had a down week since the middle of November. Right? So the question is, does it matter?
Yeah.
Is this the beginning of a market crash? It's red across the board. We must be running to the G Fund. Right?
We just talked about this the other day, right, where I was talking about, there was a post on our Facebook group about, hey, I've been losing money the last few days. Anybody else have that problem?
I have to start showing you what I'm going to talk about on these things before, we do them.
No, it's more fun like this. It's more fun. I don't know what's coming.
That post is what's coming.
Oh, awesome.
Yeah. It was the foundation. It's just that post, right? But that's the impetus for this whole the first half of the show.
Let's do it, man. Right. I like that.
So, are we running to the G Fund? No, we're not running to the G Fund. The only way you can answer those kinds of questions is to have some perspective of these red down days or down weeks, right? So this week's show is going to be about gaining perspective, right? We've got a pretty extensive piece about gaining perspective. Then we're going to look at the updated long-term Elliott wave count, which is my plan A right now. The bonus chart by popular demand is Rivian. We have a request also for Riot, so I'll do Riot next week. Riot actually popped onto the IBD leaderboard today, shortly after I got today, Friday, shortly after I got the request to do Riot as the bonus chart. But today is Rivian, and we'll finish up with the 2-year weekly charts. Okay, gaining perspective. So this was the post on Facebook that Colin was talking about. So assuming I'm not the only one seeing significant losses the past couple of days. So a couple of reasons that we're using this post as an example this week.
By the way, if this is your post,
I didn't put your name in there.
Yeah.
Right? And I blocked out the avatar guy.
But I want them to know that, we're not making fun or...
Oh, no.
We like to be funny. We try, and it doesn't work.
He's funny. I'm not.
We try, and it doesn't work. But it's just trying to add a little humor to it. This is actually, and this is a conversation that Jerry and I had when we were driving yesterday to take our sailing test. I said, hey, man, that post, that person posted, I don't even remember their name, but that person posted it. And I said, as much as you and I cringe when we see that, it's honestly what we feel like. So we have the number written up on our little whiteboard. It's like 6.3 million, 6.2 million, 6.3 million TSP users. I was like, there's about 5.5 million people out there that probably ask themselves that same question every day. Yep. Hey, I'm losing money. Is it just me? What's going on? And so, we kind of joke around about it, whatever. But if it is your post, I want you to know that we're not joking about it. But more so is, I know because we talk to so many people that have TSP accounts that this is the kind of things that go through their head. Yep. So as we're talking about this is the kind of, comment I would have made in 2006 or 7 before I started following, your methodology. I would have made this comment at the water cooler at the office. I'd have been like, hey guys, I noticed my TSP is going down. And if anybody there was kind of knowledgeable about the way we do this, they'd be like, hey man, don't worry. Then there's the 10 other people that they're like, oh, and they give you their, we called it shithouse lawyer.
Yeah.
But there's got to be a better term than that. That's not appropriate anymore. But that just means somebody's in the John with you and they want to play lawyer.
Right.
Like they know what they're talking about.
Or financial advisor or
give
whatever.
you legal advice. Yeah. All right, I'll let you keep going.
No, I hear you. Yeah, so we're certainly not in any way disparaging the post or the question. It was everybody. It was a really good question because it brought out a bunch of different things, and one of the things for me, which is why I'm going to be talking about it here, is this idea of perspective. So the comment posts to the public Facebook group on Wednesday afternoon. The market was down both Tuesday and Wednesday. Over those 2 days, the C fund was down 1.15%, S fund was down 2.05%, I fund was actually down Monday, Tuesday, and Wednesday. Its cumulative 3-day loss was 1.44%. And the F fund, it had hit a recent high, not an all-time high, but a recent high on Tuesday. But it was down on Wednesday by 0.68%, which is a huge one-day decline for the F fund, actually. So I'm pointing out these numbers for several reasons. I'm not going to argue whether or not the losses that we saw early in the week were significant, right? Quote unquote significant. The numbers are what they are. The term significant is relative to the risk tolerance of the author of the post. So what I want to talk about is this idea of perspective. And before I forget, we got 47 comments on that post. And so obviously a lot of people, the post resonates with people. So this idea of perspective. As you all know, we are big fans of Investors Business Daily, and IBD has a secrets to success column, right? They do the column every day, and they kind of focus on one of the 10 secrets every day with an example. It's a really valuable column if you want to check it out. The link is to this particular one is here, and I would actually definitely check it out because this particular link goes to how they started, the history behind the 10 secrets to success. Number 1 on the list, how you think is everything. Right? How you think is everything. I'm pointing it out because perspective plays a big part in how you think, which translates into action or inaction. So how do we develop a perspective that helps us manage our TSP account? For a relatively long-term perspective, right? Here's a 5-year weekly chart of the S&P 500, RC fund. The blue line is the 21-week moving average line. So it's a line graph of the 21 rolling 21-week average price. Okay, so if you connected the rolling 21 weeks average price, you get that blue line that intersects the price chart. So each candlestick on the price chart is 1 week, and the blue line is the 21 week moving average line. So the first thing we see is that the overall trend for the past 5 years is up, obviously, right? Here's the trend. The overall trend for 5 years, it's up. It doesn't go up in a straight line, right? From a week-to-week basis over the course of the 5 years, price goes up, right? Comes up, pulls back, goes up, pulls back, comes up, pulls back, right? On and on. For the majority of that time, is my eraser not working? Okay, my eraser's not working.
It's a Jerry technical conflict.
My eraser's not working, so it's going to get awful busy.
The slides are going to get busy.
Yeah, I guess so. If the eraser's not working, why would it be grayed out?
Don't know. I can't be the IT guy from over here.
Wow. Okay, now it's
just
gone.
Rock and roll.
It just went away. That's insane. This is my IT life. It's insane.
It is. It is. I need to hire a full-time IT guy to follow you around.
Just to manage me. I manage my IT. I know, it's ridiculous. All right. So I think we're back. For the majority of the time, the 21-week moving average acts as support. Right? For most of the time, This is the 21-week moving average, the blue line. Most of the time, price is above that line, right? Generally speaking, price is above that line. When support fails, bad things happen, right? Not too bad here, but that's not a correction you want to take, and COVID certainly isn't a correction you want to take. So putting things in perspective, the S&P was at 2,200 at the beginning of 2017, right? 2,200 right here, roughly at the beginning of 2017. 5 years later, where am I at? 5 years later, it doubled to 4,400. So here we are at 2,200 at the beginning of 2017. And here we are 5 years later at 4,400. So it doubled. So 2,200 times 2 is 4,400. If you had 500,000 in the C fund in 2017 and let it ride, you now have $1 million in your account, assuming you're retired, so you're not contributing anymore, and you didn't make withdrawals. Okay. Within those 5 years, you had from 2,200 to 2,860, you had a 30% move higher in basically 1 year, a little bit more than 1 year, right? From the beginning of 17 to early in 2018, a 30% move higher. You had, if you look at it from the beginning of 17 to the top in 2020, early 2020, we got to a little bit over 3,300, which was a 50% move, right? So if you started with 500,000 back here, you were 750,000 at early 2020. Then the COVID crash wipes out 3 years of your gains. It brings you back to 2,200. So all these gains that you made, you had the decline here too, but all these gains that you made over the course of 3 years goes back to zero. So now you're back to 500,000 that you had. And then the market rockets higher, right? And we double again from the bottom in 2020 to a few weeks ago in October when we were up to 4,400. So over the course of the 5 years, the trend is up, and your account doubled if you held on to it. How do we use all this to kind of manage our TSP accounts? If you were in the C fund when price was above the 21-week moving average over the past 5 years, you would have got the majority of the gains, but you would have avoided the majority of the losses, right? You'd have been in the stock funds, in the C fund here. When it broke through the 21-day moving average, I mean, you'd have been in and out here because it was right on the line. So it would have been a challenging kind of investing time. But you would have gotten all these gains. You would have managed against any potential downside risk there. You would have gotten all these gains. And then as soon as the market closed below the 21-week moving average, you would have saved yourself all these losses. You would have saved yourself the vast majority of the COVID losses. And you would have gotten all the gains that we've had since, the middle of 2020. You would not have caught all the gains, right? You wouldn't have gotten these gains here. You wouldn't have gotten these gains here. And you wouldn't have avoided all the losses. Because from here down to the 21-week moving average line here, you took a significant quote-unquote loss relative to the top. But relative to all these gains that you made along the way, that loss is minimal, right? Same thing before COVID. In this example, this is the long, kind of the long-term way, long-term perspective. If you only looked at your account weekly, you would have taken this pretty significant loss before you got down to the 21-week moving average, but you would have not gotten this loss. So again, you would not have caught all the gains or avoided all the losses, but you would have done a whole lot better than if you had just ridden it out. Okay. So if we zoom in a little bit to a 2-year weekly chart, and instead of a 21-week moving average, now we're looking at a 10-week moving average. So we see support for the majority of the past 2 years is above that 10-week moving average line. If you were in the C fund when price was above the 10-week moving average line, you got the majority of the gains, and you avoided the majority of the COVID crash and protected against downside risk during the 2 corrections that we've had for the past year. So we've had a correction here and a correction here below that 10-week moving average line. So on a shorter term basis, you would have gotten out, if you got out when price is below that 10-week moving average line, you'd have gotten out at the open on the top of that, on that week. And you would have avoided the majority, and this is even on a weekly basis, you would have avoided the majority of the COVID crash. Would you have gotten back in at the bottom using only the 10-week moving average line? No. You'd have gotten back in right there when it got back above it. Then you would have gotten this whole gain. You would have taken that loss, right? Then you would have gotten out. You would have gotten back in. So there is some work that you need to do, but you got these gains and you got these gains.
And all things considered, it's not a lot of moves.
No, it's not.
Right? And so I think sometimes people lose perspective, particularly when we're talking about, buy and hold versus what we do, right?
Yep.
And we get out when the trend is going down. We get back in when the trend is going up, when it's confirmed,
right.
Not when we're guessing, when it's confirmed. And so we tend to have a higher performance overall than someone that is buy and hold, even though buy and hold kind of hides that. Right, because you still get gains.
Yeah, sure.
Because you ride it out because the market always goes up, although it doesn't.
It depends on your perspective.
It depends on your perspective.
Over the 5 years, the first chart, right? Over the 5 years, the trend was up, no doubt about it. Now,
but you could have taken advantage.
Oh yeah.
Right, and that's the point.
Yeah.
So it's not that buy and hold doesn't work; it just doesn't work as well.
Right.
It's not. It doesn't perform as well as actively managing it.
Right.
Passively managing would be buy and hold.
Yeah.
And what really, and I know we talk about this all the time, it just blows my mind when people are so adamant about buy and hold, like I'm just going to put my money in CNS or just put it in C and I'm going to leave it there. Then why do you even talk about it?
Yeah, I have no idea. That's right.
Because those are some of the most argumentative people with such high opinions of what you should be doing.
Right.
And I'm like, if your opinion is to
do nothing, essentially.
Do nothing but put it there, then why do you have an opinion?
Right.
Right. You should just be, like sitting on the sidelines going, hey, this is what I do. It's working for me.
Yeah. I honestly
not
have no idea.
convincing people that they should do that.
Right. Yeah. Ironically, we actually have a methodology, and I'm not trying to convince anybody they should follow it.
No.
I
think people sometimes think we are, and we're absolutely not. What we're trying to do is educate you on what we do, and we think our performance speaks for itself. Yeah. And so we're not trying to convince you.
No,
we are. I'll throw a caveat. We are trying to convince you that we think. I think that I don't want to put words in your mouth, but I think, regardless of what you choose, do it with some education.
Yeah.
If you choose to be buy and hold, if you choose to be a passive investor, do it on purpose. Right? I don't have time for it. I've got all these other things, whatever your reason is, right?
Sure.
If you want to be a passive investor, then do it. But do it for the right reasons. If you say to yourself, I don't know any better, then I don't think that's a good thing. I think you should educate yourself and decide, well, maybe I could invest a little bit of my time, a little bit of my time, and I'd do better. That's really our come from, I think, is more like educate yourself, do what you want to do. Yeah. But please at least educate yourself.
Yeah. And in terms of educate yourself, I think this whole thing about perspective, because that's at the end of the day what I'm talking about here is getting perspective, and the way you do that is to have tools that enable you to figure out whether or not were the losses that I incurred in the last 2 days significant? Right. And I'm going to kind of get to that at the end of this thing.
Are the losses significant, or are they just, reasonable?
Yeah. Do they fit with? So do you have a range? Do you have a thing, a metric, a tolerance, something?
Risk tolerance. We talk about it all the time. And I think that people get lost in what the definition of that is. When we say risk tolerance, we say, you have a line in the sand above and below what you think you're going to absorb in loss or gains, right? You got lines in the sand. So we have them, right? Are your lines in the sand like this?
Right.
Or are your lines in the sand like this? Like your risk tolerance is driven by where I'm willing to get in, I'm willing to get out. Well, that's what we talk about, is that thing, right?
So there's two things there. You can have a risk tolerance that says, I'm retired, I can't afford, I'm withdrawing monthly from my TSP, I can't afford to lose
a dime,
right? If you can't afford to lose a dime, your bottom, the base of your risk tolerance is right up against the price, right? Your upper level can be obviously infinite. Nobody has a top level, right? But we know that price goes up and down. So if you can't give some room for price to breathe, you're going to be in the G fund all the time.
Right.
And then therefore your upper isn't happening.
Right. You're going to maintain.
Yeah.
You have what you have.
And you're not going to lose anything, and that's great. Right. If that's what makes you sleep well at night, then again, be in the G fund. Don't mess with it.
But with a market the way we have, the market that we have, I think there's just an argument to be made that you're doing yourself a disservice by doing that, because you can make some money. You do have to get educated, and you do have to. What you do is you have to measure your risk, right? We're most people would say we're risk averse because we're out as soon as. But that's mostly has to do with the two moves, right? We only have so many moves. If we had infinite moves, we would be a hell of a lot more aggressive.
Yes.
In the TSP.
Yes, for sure.
Because we could get in and out.
Right. Well, what that boils down to is, for us, our risk tolerance isn't based on how much the market moves up and down in terms of price or percent in a day or 2 days or a week.
Right.
It's relative to the trend lines and support levels and all that. That's
perspective.
It's perspective. And it's having tools in place to make decisions based on the movement of price. The decisions aren't made on the movement of price. They're made on the relative movement of price versus the tools that you're using for the metric, right? So I'm probably going to repeat myself again on my notes here. But anyway, we zoom in a little bit. The 2-year weekly chart. Again, the blue line's a 10-week moving average. We get the majority of the time you get support above that 10-week moving average line, and we went over all this. So if you just used the weekly chart and the 10-week moving average line, you definitely avoided the majority of the COVID loss. You had to do a little bit of work in the 2 corrections that we've had since then, but for the rest of the time, you're in the stock, you're in the C fund. If we zoom in one more time to a 6-month daily chart with a 10-day moving average, right? Because now we're on a daily chart. So the blue line is the 10-day moving average, and the red line is the 50-day moving average. And again, we see generally there's support above the 10-day moving average, right? Generally, price is above that 10-day moving average line. Okay. When the 10-day fails, right, 10-day moving average line fails, we generally get support at the 50-day. So if you're a subscriber to the site, you know that these are the reallocations that we've made since the beginning of September. Okay? So the way we look at this in terms of using the tools to maximize upside gain and minimize downside risk, right? We were in the stock funds back here. We moved to 50C, 50G on that one black day right there. We moved to 50C, 50G. So did we take a little loss relative to the all-time high at the time? Yes. We moved to 50C, 50G back there on that day. Then we moved to 100% G when it gapped down through that 50-day moving average line. So now we're 100% G down here. Market comes up, comes back down lower than where we were, and finds a bottom. Okay. We get a little bit of a rounded bottom here. Market pops back up above the 10-day moving average line. On that day, we went from 100% G back to 50C, 50G. Okay. Market comes down, finds support at the 10-day moving average line, and bounces higher. On that day right there, we got back into 100% C. So we're managing risk on the downside, and we're maximizing once the trend change is confirmed. I mean, you can see by looking at it, we had a downtrend here, and the trend reversed here. And so we responded to the reverse of the trend. And then later, back here on November 4th, we actually did another reallocation where we brought the S fund into the mix. But you get the idea. So if we circle back to the original post to the group, were the losses on Tuesday and Wednesday of this week significant, right? Quote unquote significant. And the answer is yes. Not because the dollar value or the percentage of the loss, but because the losses stopped at the 10-day moving average line. So for me, were those losses significant? Yes. Because now that they stopped at the 10-day, I'm expecting to get support there, which is what we saw on Friday. So those are the things I'm looking at to determine whether or not I'm going to reallocate to the G fund, not the dollar value of 2 days worth of losses. This type of analysis is how you gain perspective on both or on the daily sort of price fluctuations. So by using these tools to determine the significance of price action, you get the majority of the gains that the market gives us, and you minimize the risk of potentially actually significant losses. Okay. Hopefully that gave some people some things to think about in terms of, perspective.
Yeah. You got to keep it in perspective. You got to zoom in, you got to zoom out, right? You got to keep kind of a bigger view. Yeah. And I think so many people, the funny thing is the people that I see that, whether they're actively managing or just actively worrying,
right.
Big difference, right. But they kind of make it the same. Actively worrying is they're worrying day to day instead of just backing off a little bit. Yeah. If you want to worry week to week.
If you want to worry when price comes down and sits on that 10-day moving average line for a couple days and starts developing a pattern on the line, because now you're thinking, oh, it was a B, C. Like now where we could get an actual correction because the 10-day moving average line doesn't hold. Like
right.
The decision points happen at the support and resistance levels. That's where significant things happen.
Right.
It's not how much I lost or gained today or this week. It has nothing to do with it.
Yep.
It's all relative to the support and resistance levels and the Fibonacci extension levels and the other tools that we use. Yeah. All right. Updated Elliott wave count. So we've shown this chart. I look at this chart so much now, I think we show it every week, and we very well may show it every week, and we probably should, and we probably will, because it's plan A right now. Elliott wave works in 5 legs. So you get 5 legs up, 3 legs down. That's how it works. And they're patterns within patterns. And that's one tool. The Elliott wave count is one tool. So my plan A right now in terms of the Elliott wave count is that from the bottom at COVID, we've come up in 1, 2, and the 3 leg is expanding within 5 legs right now. So we came up with a 1, a 2, and the 3 leg is playing out as 1, 2, 3, 4, 5. So when we get to the top, and we may be there, I don't know, but when we get there, based on the count that I have right now, we will be at the 3, right? In the bigger scheme of things, we're at the 3. Then we should get some kind of correction for a 4 that should come somewhere around the previous 4, which would be roughly 4,200. And don't worry about the time. I'm not trying to show when this would happen. I'm just saying the pattern ought to play out in some kind of corrective ABC pattern down to a 4, and then we get a 1, 2, 3, 4, 5 back up to the 5. And when we get here, we'll talk about that when we get there. But in the relatively short run, we're approaching, if we're not already at this 3. And this 4 should take a little while, right? It should be some kind of correction that's kind of commensurate to that. So I think that's my plan A. It could all change, but I shouldn't say it could all change. It's not like it can change to an infinite number of possibilities, but there are other possibilities. One of the things that I'm pretty optimistic about right now is this trend line right here. So this line has been pretty good support since back here, right, February of this year. So it's a pretty long-term trend line. We have dipped below it, obviously, and this correction was below it, but we're now back above it, and we seem to be moving higher from here. So maybe we get a little bit more of a push because we know seasonality is with us for the end of November and certainly the end of December. So it's possible that, the 3 is actually over here at the end of December. I don't know. Who knows on a day-to-day basis how this plays out. But we're approaching a high. Then we're going to get a correction if my plan A holds up, and then we'll get new highs again. So that's where I think we are. That's my plan A in the relatively short run. Okay. Bonus chart is Rivian. Rivian Automotive Group IPO'd this Tuesday. So I'm going to read you a little bit of an Investor's Business Daily article that came out on the day that Rivian IPO'd. If you want to read the whole article, there's the link right there. Okay. The Amazon and Ford-backed Rivian's R1T, which is their latest electric truck, beat Tesla and General Motors to the punch as the EV market for electric trucks heats up. Rivian says limited R1T pickup deliveries began in September, with its R1S SUV due out by the end of the year. Rivian Automotive makes its vehicles at its plant in Normal, Illinois. The plant has a production capacity of 150,000 units annually. Rivian last month received regulatory approval to sell and deliver both its R1T pickup truck and R1S SUV in all 50 U.S. states. The National Highway Traffic Safety Administration, the EPA, and California Air Resources Board fully certified the vehicles. Rivian is said to be prioritizing production of electric vans for Amazon, according to a recent Bloomberg report. Amazon has ordered 100,000 of Rivian's electric vans. While Rivian's R1T pickup has grabbed the headlines recently, Amazon's vans are more likely to be revenue drivers in the near term. That's why Rivian is reportedly focused on producing hundreds of vans for Amazon this year, while pickup production is only nominal. Amazon revealed a filing on October 28th that it had a roughly 20% stake in Rivian. So Amazon owns 20% of Rivian. So with all that as the backdrop, those are all the fundamental things that we would want to know about, among other things, when we're talking about, do we want to invest in Rivian? And we always say, this is usually when Con jumps in and says, this has nothing to do with TSP, where we talk about this to kind of break up the monotony.
I was going to leave out the disclaimer this time. Everybody's right now is like, why the hell are we talking about electric vans?
Yeah.
Well, it's something else to talk about besides the TSP. There's only 3 real funds.
Right now, until next summer, there's only 3 things we can talk about, 3 charts we can look at. Imagine what it's going to be like next summer when I can throw up 7,000 charts. Yeah. I'm not going to throw up 7,000 charts. Yeah.
We'll have a 7-hour show We'll be like Joe Rogan.
Yeah. I can't. Yeah.
All right.
Okay. So I think it was on the member-only call that was, what Monday? And it kind of threw me for a loop because somebody asked if we would do Rivian as the bonus chart. And I pulled it up on my phone and I couldn't find it
because it wasn't
on
public
StockCharts because it hadn't gone public yet. And so then now I had to Google it because I had heard of Rivian, but I hadn't thought about it in a while. And so Tuesday at IPOs. Okay. It opens on Tuesday about $107. And what I was kind of, I can't show it on this chart, but on the first day, the headlines at the end of the first day was that Rivian gains, I think it was 29% that day. And I'm looking at the chart and I'm going, wait a minute. It opened at 107 and it closed at 100. How did it gain 29%?
How'd that happen?
How did that happen? Well, if you are an accredited investor, you get to invest in pre-IPO products. So the last pre-IPO investment that got made, the price was like $75 ish. Mm-hmm. And so when it opened to us, the public, it opened up here at 100 and whatever. And then ran up, did what it did during the day and closed at 100. So if you bought it at what you thought was the IPO at 107, at the end of the day that day it's down to 100. You didn't gain 29%. You did relative to back here when if you were an accredited investor and you bought it back
you were
then.
in pre-IPO.
Yeah. So the real question is do you buy Rivian? So it's only been it IPO'd on Tuesday, I guess Wednesday IPO'd here at 1:00 on the 10th. 1, 2, 3. So it's only had 3 days of trading, 2.5 days of trading. I wouldn't, unless you're sitting at home in your underwear, you can't trade it anyway. I mean, it's only been active for 3 days. But what can you kind of gain from this chart, which is 3 days, where each candlestick, each tick is 5 minutes. So it opens here, does a big run up, and then collapses. But you got a head and shoulders bottom, right? Pretty good head and shoulders bottom, and so you can definitely see there 100 and 250 would be anything above 100 and 250 at this point is a great place to buy it. And guess what? Everybody saw it because the next morning it gapped up and opens at 112, whatever. So 10% above where it closed at the night before. So it opens really high, comes down a little bit, and bases. Once it bases there, that's a pretty good indication because it's not looking like it wants to go down and close the gap, right? It came down off the open, but it based and then jumped higher. So that 5-minute tick right there was a great time to get in, period. It ran up, came down, say that 62% retracement level. I'd have to draw it, but it's pretty close. You can see it by looking at it. Double bottom, that was another 5-minute tick that you would have been a good time to get back in. This is all day trading though, but it's exactly the same as you would do it if you were looking at if this was a 6-month chart where each of those ticks was a day, the ticks are the same. If that was a day, then this would have been several months and we would have had a 62% retracement, and that still would have been the time to get back into it on a daily basis. So all these, the fundamentals worked. It doesn't really matter about the time frame. It's just that this particular company has only been a publicly traded company for 3 days. So now today, it's up 5.66%. That's awesome. If that's the only thing you look at, you know that Rivian popped, 5.5% today. it had a huge move up in the morning and then basically went flat the whole day. And the flat is definitely outside the pattern of any of this. So if it's me, I'm looking at that and I have no idea what's coming next. There's nothing here. I mean, throughout the day on Friday, I was looking at it and I was looking at that, basically that trend line. I mean, I wanted to, if I was going to buy it, it would have been here on an uptick, not a downtick, right? If it had gotten support at this trend line and ticked up, that would have been a great place to buy it. But it kept going and it broke the trend line and it did this whole, one day isn't a long time in terms of time, but in terms of the life of an IPO that's only 3 days old, this is an exception to what we've already seen in the trend. So hopefully that gives you guys a little bit of insight. I wouldn't, if I was going to buy it at this point, it would be above, if I was being really aggressive, it'd be above 132.5. And if I wanted to be more conservative, it'd be above whatever that high is right there. And I would have a stop loss at 125. So that's where I am for Rivian. Hopefully that helps somebody because they asked for Rivian. All right. The 2-year weekly TSP funds. So what I've been doing here, and I think I'm going to continue to do it, is kind of show the price chart on top and the relative strength chart on the bottom. And the C fund, we're saying the C fund relative to the S fund. So on the price chart, we get the C fund. We got the blue line is the 10-week moving average line. Red line is the 50-week moving average line. And then on the relative strength chart below it, it's the C fund in the numerator and the S fund in the denominator. So we're comparing the performance of the C versus the S. So you can see down here, the C fund, when the C fund's in the numerator and this line is going down, the ratio line's going down, it means the C fund is underperforming the S fund. Okay, so even though the price of the C fund is going up, it's not going up as fast as the S fund price was going up. That changes in February because if you remember, if you've been watching the show, you definitely know, the S fund basically went sideways since February, but the C fund continued to go higher. So on a relative basis now, the C fund is doing better relative to the S fund. All right, so that's how these charts work. It's pretty valuable to figure out which of the 3 TSP funds you want to be in. So this was our first week, our first down week since that week, fourth week or third week or whatever in September. Is it significant? We're down 0.3%. We came down, reversed, and came all the way back up, and finished down 1/3 of a point for the week. But we got it was a strong week. I mean, I'm looking at this as a good thing. We needed to blow off a little bit of steam from 5 consecutive up weeks, and so we did take some of the wind out of the sails. But we did it, and at the end of the day, we're only 1/3 of a point down from the all-time high. I'm going to take that as a win. So do I think, again, it's red across the board for the week. Are we running to the G fund? Absolutely not. And it also came in on relatively low volume. So I'm not worried about the C fund right now from this chart's perspective. The thing that I'm not worried about but looking at is that we know that the 3 up here is coming. Whenever we get some, based on my plan A. From the other chart, this was the 1, the 2, and then we had 1, 2, 3, 4, 5. So whenever this ends, now we're looking for this longer term correction. So could we be there now? Yes, we could. Absolutely, we could. We won't know until we get there, until it's confirmed. Don't know. I would like to avoid this, what I think is going to be not a market crash, but a correction that I don't want to be in. So I'm watching it pretty closely right now. On the other hand, the S fund, this is the flat consolidation I'm talking about. Last week we had a clear breakout. This week we got, much like the C fund, a little bit of a consolidation or a little bit of a pullback, but it finished, 0.2% above this all-time high. Like, I'm going to take that as a win, and we're staying, as long as we stay above this channel line was the thing. As long as we stay above that line, the assumption is we go higher from there. The only other takeaway from this chart is that it looks like, on a relative basis, the S fund wants to start overtaking the C fund. So if we get to a point where this line really starts ticking up, then you want to be overweight the S fund versus the C fund. All right. I fund. I'm not a fan of the I fund right now. It should move higher. If the C and S both move higher, the I fund will move higher with it. But clearly, the I fund relative to the C fund hasn't been doing well for quite a while, and it doesn't have the explosive potential. It's not bad. We got this channel, and when we get above it, it'll be better. But it should move higher. It's just doesn't have the same kind of explosive potential as the S fund, and relative to the C, it's not the fund you want to be in, or at least it hasn't been. So I'm not a huge fan of the I fund right now. F fund, I think, is the most interesting chart, but for our purposes, you got a high, a lower high, a lower high, lower high, lower high. Absolutely no reason to be in the F fund right now. Relative to the C fund, you don't want to be there. And just the chart in general with consecutive lower highs, the trend is down. So no reason to be in the F fund. All right.
Questions?
That's all I got.
Well, that was a lot.
It was a lot. Yeah, it was a lot of stuff.
You're right. I stayed quiet as much as I could. We always battle back and forth to see how long Colin's going to talk.
There might be some bets out on the Facebook group about that.
Who knows? Yeah. I sometimes I wonder if anybody's even watching.
Yeah, well,
I know a lot of people watch because I see the numbers.
Yeah.
But I'm like, did you listen to what we said?
If I could get anything across, honestly, it is this. It is creating tools that resonate for you, that put daily price move in some kind of structure,
coherent,
you know what I mean?
Yeah.
That you're not freaking out about. Either you're not jumping for joy because you made 2% today in the C fund, or all depressed because you lost 2% in the S fund. Sometimes it matters.
Yeah.
When it hits those metrics,
Yeah. If you guys are smelling what we're cooking, then share it with your friends.
Yeah.
Talk about it at the water cooler. Does anybody even talk at a water cooler anymore? What would it be? What would be the equivalent? Would it be the coffee?
What are those things called? The artistic things that you create a little
NFT?
Yeah. Let's create a water cooler NFT.
Let's do it.
And sell it. I bet you it would. I don't know.
It's an idea.
You got to get somebody that can create an NFT.
Yeah, I'm still trying to figure out NFTs. I understand the technology, but I don't understand how to actually do it. But
you got to be 12 years old, otherwise you can't figure it out.
Probably in that range. All right, guys, if you found out any of this helpful, please share it with your friends and let us know. Let us know what you're thinking. Put some comments in there.
Yep.
We get a lot of views on the show. We don't get a lot of comments.
So I would love comments like,
give us
you guys
feedback.
Are jacked up. You have no idea what you're talking about.
You guys are soup sandwich.
Yeah.
We put it on Facebook, on the group. We put it in a we put it on the Facebook page. We put it on YouTube. And from there, we put the links in different places. Yeah. So depending on where you catch it, we organically put it on Facebook and YouTube. And of course, it's on the website. If you have our app, It's right on the homepage of the app. So you literally just open up the app and just hit play.
Yeah, if you watch the show, you definitely want the app.
Yeah, and give us feedback on it. Even if you're not a member, the app is handy just to watch the show. And the show and the live streams, because both of those are free, and you can just click it and watch, and you don't have to go find it. All right, hope you guys had a good weekend. Have a good week coming up, and we will see you guys next week.
There we go.
Are we out?
Peace.
We are out.